Are you ready for one of the biggest surprises in the global currency market? Because what I'm about to share with you could change the way you think about foreign exchange in 2025. The Iraqi dinar and the Vietnamese dong are making history right now, shocking traders, investors, and everyday people who never thought these currencies could climb to such levels. Today, we're going to break down what's really happening, why these record highs matter, and what it could mean for people holding these currencies right now. Stay with me until the end of this video, because the details we'll cover could open your eyes to new opportunities and also reveal the risks that many people are ignoring. So grab your coffee, take a seat, and let's dig into the shocking news of how the Iraqi dinar and Vietnamese dong have shaken the Forex market in 2025. The Iraqi dinar, or IQD, has been a hot topic in financial discussions for decades, but what we are witnessing now is on another level. Over the past few weeks, the IQD has strengthened against the US dollar in ways that analysts didn't see coming. To put it in perspective, the exchange rate has moved from around 1,470 dinars per dollar in previous years to nearly 1,320 dinars per dollar today. That might not sound like much if you're not deep into Forex trading, but this represents almost a 10% jump in value in just a short time. In the currency world, a 10% movement is considered huge, and it usually points to bigger forces at play. This sudden climb has caught the attention of both casual currency holders and professional investors, who now see the IQD in a new light. So, what's actually driving this rise in the Iraqi dinar? The answer starts with oil. Iraq remains one of the largest oil producers in the world, and oil continues to form the backbone of the country's economy. With global oil prices hovering between $75 and $80 per barrel, Iraq has been bringing in strong revenue. Oil exports recently averaged 3.3 million barrels per day, which translates into billions of dollars in steady income. For Iraq, oil makes up nearly 95% of government revenue, so when the oil market is stable, it gives the Central Bank of Iraq more confidence and strength to support its currency. This is one of the primary reasons why the dinar is showing power in 2025, creating waves across the Forex market that few expected at this scale. But oil alone doesn't tell the full story. Political stability in Iraq has also improved compared to the instability we saw in previous years. Investors are finally beginning to trust the direction of the current government, which has been pushing for economic reforms. These reforms focus on strengthening Iraq's financial system, modernizing its banking sector, and encouraging international cooperation. Programs developed with global financial institutions are laying the groundwork for a stronger, more reliable economy. This combination of political stability, strong oil income, and reform-driven policies is creating a perfect storm for the Iraqi dinar's rise, and it is being felt not just inside Iraq, but in Forex markets across the globe. Now let's shift our focus to the Vietnamese dong, because this is another story that is shocking traders worldwide. Unlike Iraq, Vietnam's rise is not tied to oil or any single commodity. Instead, the dong is riding on the back of one of the fastest growing economies in Asia. Vietnam's GDP grew by more than 6.7% last year, a figure that places it among the top performers in the entire region. The country has become a manufacturing powerhouse, with global corporations moving production lines from China to Vietnam. Companies like Samsung, Apple suppliers, and major textile brands are now deeply rooted in Vietnam's industrial zones. This shift has created a true economic boom, fueling both job growth and export numbers, which directly strengthen the Vietnamese dong. Vietnam's export performance has been nothing short of remarkable. Last year alone, the country exports worth over $370 billion, a staggering 15% increase from the year before. These exports are not limited to one sector. Electronics, textiles, and agricultural products all make up key parts of Vietnam's success. This diversity matters because it means Vietnam is not relying on just one market or one resource. When a country has multiple engines of growth, its currency usually reflects that stability and strength. Investors have been quick to notice this, which is why institutional funds are now looking at the Vietnamese dong as a serious emerging market play. The Vietnamese government has also been very disciplined in its approach to currency management. Instead of rushing to artificially inflate the dong or trying to chase short-term gains, they have focused on building long-term confidence. The State Bank of Vietnam has carefully allowed the currency to appreciate, moving from around 24,500 VND per dollar to nearly 23,800 VND per dollar. Once again, this might look like a small step to the average person, but in Forex terms, this represents steady growth, backed by real fundamentals. It shows that the currency's value is not just being propped up, but is genuinely supported by Vietnam's economic performance. So, what does all this mean for people holding these currencies in 2025? For Iraqi dinar holders, the recent strengthening is clearly good news. Your currency is worth more against the dollar than it has been in years. But with that good news comes an important warning. The IQD is still heavily tied to oil prices. Any sharp drop in global oil demand or a sudden political crisis in Iraq could pull the dinar down just as quickly as it went up. That's why people holding IQD must pay close attention to both oil market reports and Iraq's political situation. The opportunity is there, but the risk is equally real for Vietnamese dong holders. The situation looks more stable and long-term. Unlike Iraq, Vietnam is not dependent on just one commodity. Its economy is built across multiple industries, making the dong more resilient against sudden shocks. This doesn't mean there are no risks. Emerging markets like Vietnam can still be affected by global downturns, trade tensions, or changes in major partner economies such as China. However, the general trend for the VND looks much more predictable, and the steady appreciation we're seeing today could continue if Vietnam keeps building its manufacturing and export base. Let's also address a common misconception that has been spreading for years about these currencies. Some people believe that the Iraqi dinar or the Vietnamese dong will suddenly value overnight, making them instant millionaires. That's not how currency markets work. Currencies rise and fall based on real-world economics, not sudden magical changes. The growth we're seeing now is based on real fundamentals: oil for Iraq, manufacturing and exports for Vietnam. Expecting overnight riches is dangerous and misleading. Instead, what we are witnessing is the natural appreciation of currencies backed by improving economies. In fact, this reality check is one of the most important takeaways for currency holders in 2025. Currency gains take time and they can be volatile. Even professional traders, with all their data and experience, often misjudge the timing of markets. If you're holding IQD or VND, it's important to have realistic expectations. The gains we are seeing now are positive and may continue, but no one should risk everything they have on the assumption that these currencies will keep climbing forever. A balanced approach is the smartest path. Another important factor to consider is how and where you plan to exchange these currencies if the time comes. Not every bank or exchange service will deal with the Iraqi dinar or the Vietnamese dong. Many people find the need to work with specialized dealers who understand these markets. Timing is also critical. Exchange rates can shift daily and sometimes even hourly. A smart currency holder watches these rates carefully and has a plan for when to trade. Waiting too long or rushing too quickly can both reduce your potential gains. Taxes are another practical issue that many people overlook. In some countries, currency gains are considered taxable income or subject to capital gains taxes. If you are holding large amounts of IQD or VND and plan to exchange them later, it's important to check the rules in your country. The last thing you want is to be caught off guard by a large tax bill after making your exchange. Consulting with a financial advisor or tax professional can save you from unpleasant surprises down the road. Looking ahead, what can we expect from the Iraqi dinar in 2025 and beyond? The outlook depends heavily on oil. If Iraq can maintain its current production levels and keep exporting without major disruption, the dinar could continue to strengthen. Economic reforms will also play a big role. If Iraq can succeed in diversifying its economy beyond oil, that would give the dinar an even stronger foundation for long-term growth. But if instability returns, whether political or economic, the dinar could face setbacks. This is why many analysts are cautious even while celebrating the current highs. The Vietnamese dong, on the other hand, seems to have a clearer path forward. Vietnam's manufacturing sector is still expanding, and more companies are expected to shift their production to Vietnam in the coming years. The government is investing heavily in technology, education, and infrastructure, which are all long-term growth drivers. As these investments pay off, Vietnam's economy could grow even faster, and the dong could continue its upward climb. Of course, risks remain, including global trade tensions or disruptions in major markets, but the trajectory looks more stable compared to Iraq. One interesting development we're seeing in 2025 is the difference in who is showing interest in these currencies. For the Iraqi dinar, demand is largely coming from individual investors. Many people are buying and holding IQD in hopes of future gains. For the Vietnamese dong, however, the interest is increasingly institutional. Investment funds and large organizations are adding VND to their emerging market portfolios. Institutional interest usually creates more stable, long-term demand, which is a strong signal that the VND is becoming a serious player in the global currency market. But whether you are holding Iraqi dinars or Vietnamese dong, the most important advice is to stay informed. Don't rely on rumors, hype, or unrealistic promises. Follow real news about oil markets, political developments, manufacturing growth, and trade policies. The more informed you are, the better decisions you'll make. Holding foreign currencies can be exciting, but it's also risky. It should only ever be one part of a larger, diversified investment strategy. Never risk more than you can afford to lose, and always keep an eye on both the opportunities and the dangers. So here we are in 2025, watching history unfold in the Forex market. The Iraqi dinar and the Vietnamese dong are both surprising the world, but for very different reasons. Iraq's dinar is gaining strength thanks to oil stability and political reforms, while Vietnam's dong is rising on the back of rapid economic growth and manufacturing success. These currencies may not make you rich overnight, but they are proving that real fundamentals matter. If you've been following them closely, you know just how shocking these record highs are. Stay tuned, because this is only the beginning. The story of the IQD and VND is still being written, and the next chapter could be even more dramatic.